Module 7, Fraud Detection and Prevention in Financial Operations. Course Overview. Module 7 focuses on fraud detection and prevention, a critical component of internal audits and financial control. Fraud poses a significant threat to organizations, potentially resulting in financial loss, reputational damage, regulatory penalties, and operational inefficiencies. This module provides you with advanced insights into identifying, investigating, and preventing fraudulent activities in financial operations. It emphasizes the integration of audit procedures, risk assessment, and internal control frameworks to build a resilient anti-fraud strategy. 2. Definition and scope of fraud. Fraud is defined as intentional deception or misrepresentation designed to secure an unfair or unlawful financial gain or advantage. Fraud can occur in multiple areas of financial operations, including misappropriation of assets, financial statement, fraud, corruption, and bribery, payroll and procurement manipulation, scope of fraud, detection and prevention, preventing fraudulent activities before they occur, detecting ongoing fraud through audit procedures and monitoring, investigating and reporting fraud to management and regulatory authorities. 3. Types of fraud in financial operations. Asset, misappropriation, unauthorized use or theft of company assets. Examples: cash theft, inventory pilferage, misuse of company credit cards. B. Financial statement, fraud, deliberate misstatement or omission of financial data. Examples: overstating revenue, understating expenses, manipulating account balances. C. Corruption employees or management exploiting their position for personal gain. Examples: bribery, kickbacks, conflicts of interest, procurement manipulation. D. Payroll and expense fraud, falsification of payroll records or reimbursement claims. Examples: ghost employees, inflated expense claims, falsified overtime. 4. Fraud risk assessment. Step 1. Identify fraud risks, review operations, transactions, and historical incidents to identify vulnerable areas. Use risk registers, control assessments, and employee interviews. Step 2. Evaluate likelihood and impact. Determine the probability of fraud occurrence and its potential financial or reputational impact. Prioritize high-risk areas for monitoring and control implementation. Step 3. Design anti-fraud controls. Develop preventive and detective controls based on risk assessment. Examples: segregation of duties, approvals, reconciliations, whistleblower mechanisms. Step 4. Continuous monitoring. Implement ongoing review processes to detect anomalies. Tools include automated monitoring systems, analytics, and exception reports. 5. Fraud detection techniques. Analytical procedures. Compare trends, ratios, and variances to identify unusual patterns. Transaction testing. Review transactions for compliance and anomalies. Data analytics. Use AI, machine learning, and ERP systems to flag suspicious activity. Observation and inquiry. Conduct interviews, walkthroughs, and field observations. Audit trails. Examine detailed logs to track financial transactions. 6. Fraud prevention strategies. Strong internal controls. Segregation of duties, authorization, reconciliations. Employee awareness and training. Promote ethical behavior and awareness of fraud risks. Whistleblower programs. Confidential channels for reporting suspected fraud. Fraud policy and code of conduct. Clear guidelines and penalties for misconduct. Technology solutions, automated monitoring, anomaly detection, and secure systems. 7. Investigation and reporting investigation process. Collect evidence, interview stakeholders, and document findings. Reporting. Present findings to management or regulatory authorities, ensuring confidentiality and legal compliance. Corrective action. Recommend measures to prevent recurrence, including policy revisions and disciplinary action. 8. Integration with internal audits. Fraud detection is embedded in risk-based audit planning. Internal auditors test key controls, perform substantive testing, and monitor high-risk transactions. Continuous assessment of internal controls ensures early detection and prevention of fraudulent activities. 9. Challenges in fraud detection and prevention. Sophisticated fraudulent schemes that evade detection. Collusion among employees bypassing controls. Limited access to timely data or weak audit trails. Organizational resistance to reporting and investigating fraud. Resource constraints for implementing advanced monitoring systems. 10. Emerging trends in fraud control. Artificial intelligence and machine learning detect patterns and anomalies in real time. Continuous auditing and monitoring. Automated dashboards for proactive detection. Blockchain and secure systems, ensuring transaction immutability and transparency. Integrated risk management, combining fraud detection with overall enterprise risk management. These trends enhance the effectiveness, efficiency, and responsiveness of fraud prevention programs.